What's going on, guys? It's David Piatek, and today we're going to be talking about something that I missed with the announcement and passing of the One Big Beautiful Bill. So there's two big things in there that is going to help the veteran community better leverage the VA home loan. And those two things are one, not paying taxes on tips and no tax on overtime. Now, there is some caveats to that. And I'm going to share that link with you guys down in the description, as well as go over the actual changes with the IRS and link that down below. So if you guys have any questions, you can check that out yourself. But I am going to read through it because there is a lot of small details to it, and the print is so small. And I'm assuming that you're watching this on a phone or even on a tablet. It's still small to see. So one of the big benefits of the not paying taxes up to a certain amount on tips and overtime is that now that income could be treated like your VA disability to a certain degree because your VA disability isn't taxed. Now, this can also apply towards things like Social Security benefits, but every state's going to be different. And I highly encourage you to talk with your accountant or CPA. I'm not one of those, but I do file taxes myself. I have an accountant that does it for me, but I do file taxes in general. So, all right, let me show you guys the screen from the IRS and the update that it has for you guys. And this does definitely impact millions of people because a lot of people that we work with, either a lot of people in the hospitality industry, police, fire, they do work a lot of overtime. But again, this kind of goes across the board for a lot of different professions out there. For the overtime and the tipping. So let's go over what the tipping section says so we get a clear understanding of what it is and some of the caveats to that and see if you fall into this category. So now tipping is maxed out at an annual deduction of $25,000. Also, if you're filing individually, your tax total adjusted gross income can't be over $150,000 and $300,000 if you're filing jointly. What that essentially means is that, if you have deductions because you have your self-employment business, if it deducts down to that amount or lower, you are good to go. But anything over that, then you would be taxed. Let's take a look at the overtime piece. Now, this part's a little bit different. The actual max annual deduction is $12,500, $25,000 if filing jointly. So obviously, some advantages to filing jointly. Some people will be married filing separate, which is fine. Everybody has their own strategy, and this is why it's so important to get the right information by having someone review your personal financial situation. So now when it comes to the same part is here, it's $150,000 or $300,000 filing jointly. Those are things that you need to track. So if you fall into these categories, this could be a big thing for you. So one of the big parts of you being able to use tax-free income when it comes to a VA home loan is the lender's actually able to gross up your income by 25%. Or to make the math easier, you just do 1.25, 125% to get the final number. So that is applied when we look at VA disability compensation. So whatever that amount is, we just multiply it, and then we add that as part of your debt to income ratio. It's important to note that because it is then taken away when you're looking at the residual income. So if you guys don't know, the VA is broken down to a couple different parts. And by the way, guys, I am a loan officer. So if you're interested in working with me on getting your VA home loan and walking you through that process, you could schedule a call with me down below in the description as well as in the comment section. So the big part of a VA loan, right, is residual income. Now, it changes based on where in the country you are. If you're single, 2, 3, 4, 5, 6 plus kids, that amount changes. And essentially, it's the net amount you bring home every month, right? So if you look at your pay stub, like minus if you have let's say 401k deduction, that doesn't count against you, but any type of federal, state taxes, I think Social Security and one or two other ones will count towards that, right? They deduct all that income out. So let's just say hypothetically, you net $5,000 a month. And then they're going to also factor in things like square footage, which is 14 cents per square foot for utility costs. So let's just say it's $500. So now they're saying, hey, you have $4,500 left in residual income. But then you have, let's say, a car payment and some credit cards, and that might be $1,500. So that's going to bring you down to $3,000 in residual income. And then now you want to purchase a home, let's say with taxes and insurance, it's like $2,000 a month. Then that leaves you with $1,000 in residual income to use for whatever that you need. So you have $1,000 left, right, for educational purposes only here. But then the VA will say, you need to have $478 in residual income to qualify for a VA loan. So that's one part of that, right? So, but still, like things like your credit can then factor in things like DTI. Also, if you're on active duty, those things could be implemented. We haven't really seen restrictions as far as like how when we run our systems, if you just receive VA disability or Social Security or a combination of both those things. But it is important to note that the program changes based on your credit profile. That definitely we have seen that. But also managing your personal debt and budgeting for what you're comfortable with on a monthly basis is very important. Now, for people that may receive additional income, let's say you might have self-employed income, lenders can only use income that's been reported on your tax return. So it's important to note that because sometimes people, with that statement, instantly taking it back because things like VA disability, Social Security are not, you don't have file taxes for that, right? But that is a benefit you receive. So we verify that, number one, so that VA disability, we pull your certificate of eligibility, it's going to be on there. Your Social Security award letter, we're going to request that from you and verify that you're getting that money. But then all the rest of it, like self-employment, W-2 income, we do verify that through your taxes as well as pay stubs, maybe year-end statements. If you haven't been there for the full year and you don't have a W-2, that's okay. But that's why it's so important to file. And especially with your taxes, if you don't file your taxes, lenders can still request transcripts. And if they're not filed, then you might run into some hot water being able to utilize that amazing VA home loan that you've earned. So there's a couple pieces with that. Now, with that, with the overtime and tipping, right? So it kind of goes back to what we talked about, right? They do limit. I'm now taking a look at it on another screen here. So again, the overtime is going to be $12,500 where they cap you at. Anything over that, that you've maxed the annual deduction, which I'm just assuming from logic that you just basically paid anything over that amount. Now, when it comes for how we would take a look at that, that's where it's going to be very circumstantial to you, because a lot of people don't realize that you do need to have 2 years of this additional income in order for it to be applied as income for the VA home loan. If it's 1 year to 2 years, then it could be used to offset short-term debts to help you qualify for more. So that is true. But again, if you don't have short-term debts and you're less than 2 years of employment, then or part-time employment or tipping or overtime, this all applies to that, then you won't be able to use it. So make sure that you submit all your information when you're going through the pre-approval process. Make sure that the numbers are going to make sense. That way, that process will become a lot easier. So please, guys, make sure you guys hit the like and subscribe button, and I'll catch you guys on the next video.